This is a trade that I ended up taking this morning on this candle right here, and as you can see, it was an absolutely beautiful trade. Now I want to break down how I use higher time frame analysis and then break the chart down to a smaller time frame to identify a high probability sniper entry. But real quick, as always, if you guys do find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. But without further ado, let's hop into the video. All right, so when it comes to day trading, we want to focus on the higher time frame levels. The reason being the higher time frame levels are the most important. They set up for higher probability trades and they tend to give us more follow through in the market. So I want to break down how I start doing my analysis from the higher time frames and how I work my way down to the lower time frames to identify sniper entries. So I have multiple different ways that I go about finding key levels. I like to use Fibonacci retracements, supply and demand, support and resistance, and even the 21 EMA. So I always start on the higher time frame and I'll start on the weekly. Now looking at the weekly time frame, we're just setting higher highs and higher lows. There's no key levels that I'm interested in, no support, no resistance, no fibs that I'm interested in, and no supply or demand. So because I don't see anything on the weekly, I'm then going to break it down to a daily. Now looking at the daily time frame, I do see one potential level. However, it does look like we're getting ready to break that. If price were to remain below this high right here, we could potentially take a Fibonacci retracement from this pivot low to pivot high and then look for a pullback to the 50 or 61.8% retracement. Now, if you guys don't know how to use the Fibonacci retracements, I have tons of videos on my channel showing you guys on how to use them. Now, if you guys don't know how to use the Fibonacci retracements, I have tons of videos on this channel teaching you guys on how to use them. So I will be leaving those links down in the description. But that's the only key level that I see right now as far as the daily. Again, we have no supply zones, we have no demand zones. So right now, the only thing that would be valid unless we break above these highs right here would be that 50 and 61.8% retracement. So once I'm done on the daily, I'll then break it down to a 4-hour time frame. Now, the trade that I ended up taking today was based off of a 4-hour demand zone. So as we see, we have our small basing candle right here before a strong aggressive move up. Therefore, this is going to be my demand zone, and that's where I'm going to look for price to bounce. Now, we'll come back to this demand point here in a little bit because when we talk about sniper entries, I'll show you what I look for. But we also ended up forming a new demand point because now we have another strong aggressive move away. So if we were to pull back into this area tomorrow, I would be looking for a bounce because now we have another 4-hour demand zone. So once I'm done on the 4-hour, I'll then break it down to a 2-hour and then see if there's anything valid as well. Support, resistance, Fibonacci, supply and demand. But as far as the 2-hour, I mean, you can see over here, we also had a 2-hour demand along with that 4-hour demand. So this is now a higher probability area. We had that small 4-hour zone, but then on top of that, we had the 2-hour zone that started right there. And because of that, we have a very, very strong demand zone that we want to look for a bounce in. Now, after I'm done on the 2-hour time frame, I will then break it down to a 1-hour time frame. Now, also inside of this 4-hour demand, you can see that we have a very small 1-hour demand as well. So now this entire area, we have a 2-hour, 4-hour, and 1-hour demand, making it a very, very high probability area for a bounce. Now, if we're talking tomorrow, we also have a 1-hour demand point right here. So when I'm going through and doing my analysis, I'm always starting on the higher time frames, but then breaking it down to smaller time frames to see if there's any other setups that we can use. So again, I'll start on a weekly time frame, break it down to a daily. After the daily, go to a 4-hour, then a 2-hour, and then a 1-hour. Very rarely will I go lower than an hourly unless I really think I see something that maybe I'll break it down to a 30-minute, but I do want to say like 99.8% of the time, it's on an hourly or higher. So now that I have all of my levels marked out, my supply and demand, my support and resistance, my fib levels, whatever it may be, I then formulate a game plan for the day. Like today, I said I was looking for NQ to bounce inside of that 4-hour demand. And then after that, we had another demand zone like somewhere way down here. But this was my main bounce for the day. Now, if there were any reject areas, I would put that on my list as well. Only issue is we're trading pretty much at all-time highs, so there's not much that we can use for a reject. But if there was a reject valid, then yes, that would be on the list. So once we identify our key levels based on the higher timeframes, again, hourly, 2-hour, 4-hour, daily, weekly, that's when we can break it down to a smaller time frame and identify a sniper entry. So when I am day trading intraday, what I am watching is a 5-minute time frame, a 15-minute time frame, and then I'm also watching a 2-minute time frame. So on my ThinkorSwim chart, I'll have all three of these pulled up at once. That way I can get multiple different perspectives when price is trading around my key area. Now, when it comes to actually like getting a sniper entry, most of the time my entries are going to be based off a 5-minute or 2-minute time frame. So today, like I said, my main area that I was watching was going to be that 4-hour demand zone, which is going to be this area right here. Now, what I am looking for when price comes down into the level is I'm looking for bullish price action as well as bullish volume. And again, we're sniping our entries either on a 2-minute time frame or a 5-minute time frame. So looking at this 2-minute time frame, price came down, it hit the demand zone. We had a very long lower wick confirming that buyers were truly coming in off of this level. Again, this is a higher time frame level, a 4-hour demand zone. Price came down into the zone, and at one point this was a solid red candle. However, later in the candle, buyers showed a presence and drove price all the way back up into here. Now, also at the same time, we have an elevation in volume. Yes, this is a red candle. Yes, it has red volume, but again, piecing together that this is a key level with that lower wick, that is telling us that buyers are truly present at this area and confirms a long entry. So as this 2-minute candle closed, that's when I ended up getting long with my stop loss right below this low right here. And this is exactly how 99% of my trades look, because I'm simply starting from a higher time frame, working my way down, identifying these key levels, and then waiting to see if we truly confirm off of these areas. Because if we're truly going to confirm, we can break it down to a smaller time frame and really see how price reacts. So because this was my entry, and I want you guys to make note of this, the candle that gives you the entry, your stop loss is always going to be right on the opposite side. So because this was the candle that gave me the entry, my stop loss was right below this low right here, right there. So if price broke below that 18,994, that's where I would have stopped out. And as you can see, this thing now has rallied all the way to 19,161. Unfortunately, didn't catch that entire move to the upside. But again, this is exactly what I am looking for every single time price trades towards my key levels. Break it down to a smaller time frame, 5-minute or 2-minute, and look for confirming volume. Break it down to a smaller time frame, 5-minute, 2-minute, and look for confirming price action and confirming volume. Now, it would be the same thing if we were to look for a reject. We would be looking for price to come up into the resistance point, whether that be a Fibonacci retracement, a supply zone, a resistance, a fair value gap, however you find your key levels, you're starting on that higher time frame, working your way down, marking the key levels, and then waiting for price to trade into the area, break it down to a smaller time frame, 5-minute, 2-minute, look for the confirming price action and the confirming volume to tell you, hey, this is a good time to go short. So again, let's just say that we had a resistance point up here, supply zone, whatever. We come up into it, we get this very long upper wick and an elevation in volume. That's exactly what you're looking for on the lower time frames to confirm your short entry. Now from there, you would go short with your stop loss right above this high. Again, because this was the candle that confirmed your short entry. So you would simply stop out if we break on the opposite side. And again, I'm sorry if I'm repeating this, but this is exactly what I do every single day. And this is how I'm able to profit in the market. Break it down from a higher time frame, find your key levels, and then break it down to the smaller time frames to see if those levels are truly valid. If price were to come down to the level and it never gives confirming price action and never gives confirming volume, you don't take the trade because the level is not valid. Remember, we never want to go long or short just because price hits a level. We need to always wait for that confirmation to tell us now is the time to get into the trade. And if it doesn't give that confirmation, then you do not enter and you wait for a different setup. But that's going to wrap up this video. So as always, if you guys did find value, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. Everybody have an amazing rest of your day, and I'll see you guys in the next video.